Stock futures rose and bond yields fell after the latest jobs report reinforced bets that the Federal Reserve will start cutting interest rates as early as June. Non-farm payrolls, they came out 275,000 jobs up. But is that really true? The unemployment rate, it actually went up as well. And Fed Chairman Powell, he testified this week before lawmakers and said he suggested that the central bank is getting close to the confidence it needs to start lowering interest rates. Hi, this is Mike Wise with your weekly mortgage update. We entered the week with a yield on the 10-year Treasury at 4.22%. This morning, we are at 4.08%. So why have the yields come down and mortgage rates begin to fall? Well, there's a few things that have happened. First, this week, like I said earlier, Federal Reserve Chairman, he made these comments that they are gaining that confidence that they need to start lowering the rates. This gave both the stock market and the bond market what they wanted to hear, a sign that they are going to lower rates soon. So June continues to be the market's guess on when the Fed will start to lower the Fed funds rate. Markets rallied on this news, and the yields dropped on the 2-year and the 10-year Treasuries. In addition to that, the job numbers, they came out this morning, and at first glance, it was a huge increase in the jobs numbers, the job creations. We were expecting 200,000 creations, and it actually came in at 275,000 job creations. Way more than expected. So, in addition to that, the unemployment rate, it actually went from 3.7 to 3.9%, which is contradictory to the huge increase in jobs created. The reality is here that they've had huge revisions, and today they actually had big revisions in the jobs creations for December and January, and they revised them down. So this is the 10th out of the last 12 months that they've made substantial reductions in the initial numbers that have come out. So the market, they don't really believe the 275,000 jobs that were created. They see the reality of the economy actually slowing. So along with these revisions and Chairman Bernanke's comments, the rates came down slightly, and we've been quoting rates in the high 6s, low 7s, depending on where you're at with your down payment and credit scores. So next week, inflation numbers will come out, and we may see a path for lower interest rates if inflation is muted. Buyer confidence is obviously not high right now because interest rates are driving the housing market. Inventory is down because of the sell-buy motivations for the seller and the buyers. In fact, 49% of the population would feel more urgency if rates dropped to 4%. 30% would consider selling and buying if rates dropped to 5%. Think about this for a minute. If I could show you how to get a rate below 5%, do you think you'd have a few customers that would pull the trigger, sell their house, and buy another home? If you're interested in learning more about this, shoot me a text, and I can set up time to go over how I can help your clients pull the trigger and sell their home and buy a new home with a rate that is under 5%. This is Mike Wise. I will be around this weekend. Give me a call, shoot me a text. Have a good one, and we'll see you next week.